And you spent some time in the Middle East?
I did. I started my career in the Middle East.
Okay. So what are your reflections? Or firstly, how was your time in the Middle East? And secondly, what are your reflections on those who either have recently moved, are moving, or are there now in terms of everything that's happening?
So look, my time in the Middle East was fantastic. That was the first place that I moved to from the UK. I moved there as a 25-year-old.
Not fun.
So it was a lot of fun. It was different to how it is now.
Yeah.
You know, not as built up, but even in those days, it was an environment that was very exciting. It was growing fast. You know, it was a really fun place to be. And at that point in my career, it was fantastic because you get opportunities as an expat often that you wouldn't get, you know, within London or in the UK more generally. So, you know, you get a little bit of rope to grow from. So it was a great place. And I think it's still a great place, and it will be a great place once we've got through this current
things settle down.
Yeah.
I'm just going to bring your mic slightly this way.
Okay.
And I think we're probably ready to go, are we?
Alex, are we...
Yeah.
Yeah.
Good. Hi, everyone. Welcome to Taking Stock After the Bell, episode 62, I am led to believe. Well done, James, and for putting up with us for that long. Delighted to be joined today by John Goddard. John is the Chief Executive Officer at Quilter Cheviot, so he's our boss, basically.
Big boss.
No swearing. He has nearly 30 years financial services experience, predominantly focused on ultra high net worth and high net worth markets. Prior to joining QC, John held leadership roles at HSBC across Europe, the Middle East and Asia. John holds a diploma in company direction from the Institute of Directors. He also holds honours degree in history and politics from Cardiff University and in financial services from the University of Manchester. He is an associate of the Chartered Institute of Bankers and a member of the Chartered Institute of Securities and Investment. Outside the office, John is active in the third sector, having lived across 7 different countries. Impressive. He also enjoys travelling and spending time with family and friends. John, good afternoon and welcome.
Good afternoon. Thanks for having me.
Yeah,
It's a pleasure.
Well, we touched on it a little bit there, really. Why don't you sort of give us a little bit of a flavour first as to your sort of, you know, your journey. We're all on a journey in this world these days, aren't we? So through banking and how you sort of ended up at QC, really.
Sure. So look, fantastic to be here. I mean, I think in terms of my journey, left university and didn't really know what I wanted to do, or rather got towards the end of university, didn't really know what I wanted to do, like most people. Applied to a few different graduate programs, still not knowing what I wanted to do, but kind of had the view of life that I'd go and join a blue chip and working out from there. And ended up at HSBC on their graduate, or rather Midland Bank as it was in those days.
Oh, yeah, of course.
And through that, it sort of opened up a whole world that I didn't know would necessarily be open to me in terms of having an international career. So after spending my first 4 or 5 years in the city in London, I applied to and was successful in getting a role abroad in Dubai. And then subsequently that sort of opened up a whole world for me in terms of moving around. So yeah, I think I lived in 7 different countries, 10 international moves, and yeah, had a fantastic career with them. Great opportunities. Met my wife abroad. Had 3 children abroad, and came backwards and forwards to the UK for work for different roles. But finally decided that the time was right to come home and put down some roots. And the opportunity with Quilter Cheviot came up, and a very exciting opportunity it was. So took it with both hands.
Good. And it's been 6 months now.
It has.
I'd say. And
That's right.
What are your impressions of QC and our sort of position in the market, and how that compares to perhaps the big private banks and what they offer to clients? What are your sort of the key differences? And key I guess key similarities as well?
I think when I was actually having this conversation with a client at lunch today. When I think about QC, I think, and when I was doing my own due diligence, frankly, when I was going to join the firm, or before I agreed to join the firm, it was to look at the business and look at it honestly across a number of different factors. So I saw a business that had great people both in terms of their technical ability, what they could deliver for clients, but also in terms of their motivations, what they were trying to achieve. Very client-oriented, which was important to me. So service and ensuring that there was a good service for clients was important. And I see that in spades and continue to, but also an opportunity to do more. So I think as a firm, I'd really like to see, and I think part of my role is how do we bring more of QC to more clients and grow the firm that way? Because I think, to your point about the market and where are there opportunities, I think certainly the high net worth segment is a segment that is more complex than the average, and it's rather underserved actually by the players that are in the market. So I think there's an opportunity for a firm that offers a great technical service along with great client service and the ability to truly bring a bespoke proposition to a client and to adjust that proposition for the client to do really well. Private banks are great at that, but they're great at it usually at a much higher point on the scale, and they're not as good at dealing with clients and really adapting their proposition for clients at that position.
I was going to ask that, because we don't have some of the services that a private bank might have. I mean, the easy one is banking.
Yep.
Do you think it helps us that we're not distracted by other products and services, and actually all we do is think about, giving the best service possible to the client, investment returns, the right risk and objective, and those things? Do you think do you think we service our clients better because of that?
I think it's an advantage if you're focused on what it is that you can bring to a client, and you're not focused on things that are on the periphery that you're perhaps not able to be as good at. So I think there's definitely advantages to that model. We're an investment company through and through, and that's what we do. And so I think there's definitely advantages through it. It comes down to the complexity of the needs of the client and fundamentally what do they need. And I think at the lower end of private banking, often the service that is being offered is somewhat more vanilla than we can offer. So that's an advantage for Quilter Cheviot.
That makes sense.
I mean, I would sort of, from my own position, certainly it sort of feels like our investment managers do build quite strong relationships with the clients and advisors that we deal with on a day-to-day basis. And there is a sort of an element of, and I often sort of think about if you're a relatively wealthy person or an out-and-out wealthy person, the person that you entrust your money to all of a sudden is behind the wall, if you like. They're on your inside of the wall, because you don't talk to your friends over dinner about what you might do, but you don't talk the intricacies about what your pension's doing and how much income you need and how much money you're spending and how your second child's a bit wild and therefore you're a bit worried about whereas we get those conversations. So I always think that we are therefore very privileged. I always often find myself very sort of privileged to be in that position. But I think, James is right to a degree. We do focus on that relationship, and it's kind of humbling to be there, I guess. But I mean, how do you sort of see QC developing, and what are your sort of ambitions, if you like, for the business as a whole?
Yeah. So look, I mean, I think at its basic level, this is about how we can do more for more clients and bring more of QC to more clients. We've got really strong foundations, as I said. So I think it's about how do we build from there? How do we add appropriate propositions and services to our broader proposition to bring more of QC to them? It's about how we help our investment managers and our advisors to be more efficient and more effective in front of the client. So that's bringing in technology to support the process. It's about streamlining rather some of the things that perhaps get in the way from us doing more. And it's about really focusing on service because it's a key differentiator. And as soon as you stop focusing on servicing, having that at the core of what you do, you start to go off kilter from what you're trying to achieve. Going back to your point, though, if I may, about the privileged nature of what we do, which I completely agree with. But it's also, the reality is that clients are in order for the client relationship to work really well, clients have to be really quite vulnerable. And to your point, they tell you things that perhaps they're not going to tell their mates in the pub. That is a privilege. And if you can build that kind of relationship, then that allows us to do what we do, to the greatest possible extent. So that is, that's where the magic happens from.
That's the sort of cornerstone.
I mean, I often say to a client, I'm doing a good job if you aren't thinking about your investments. It's doing...
Such a good line, Husey.
Jonathan. No, in terms of you're not worried about what's coming through on a monthly basis. It's all set up and there's someone that you trust behind the scenes that's making the right decisions in an environment like we find ourselves in today when the unknown of what's going on in the Middle East, none of us have the answer. It could be over after the weekend or it could be 2 weeks or a month or whatever. But I think we should always be in that position where we are allowing the client to either enjoy retirement or think focusing on family or work or whatever else it is. So I think that's what we genuinely do a good job at.
Yeah, and let's be honest, most clients don't think about investments, right? They're not, and they shouldn't. They should be thinking about their goals and their dreams and their ambitions, and to an extent their fears and what keeps them up at night. And that's what we as professionals need to be focused on is how we help them to achieve those goals. And we do that through investments. But that's the investments is not the end game. The end game is allowing them to give their children the education that they want. It's allowing them to retire in the way that they want to.
Yeah, no, totally agree. And then James has been in the same position as me. We've got clients, in their, junior ISAs, but if we've got clients in their 20s, 30s, all the way through to sort of 70s, 80s and 90s. I guess one observation for having been here for 13 years nearly, is that, how we communicate and service our clients in a sort of broadest possible way has developed a lot. How do you see that kind of continuing to further develop through communication channels? In the old days, you used to get a letter from Mrs. Snooks, can I have £5,000 for a new boiler, please? And you had 10 days to turn it around. Whereas now you get an email or a phone call and they sort of expect, so it has changed a lot. But then the younger clients in their 20s, they don't want to use email. Email is so old fashioned if you're in your 20s. So how do we, how do you think we continue to adapt how we service our clients?
It's interesting, isn't it? Because you can't look into the future. And if you did, you perhaps wouldn't predict what, the way that things have gone. I guess I'm in two minds on this. On the one hand, clearly there's going to be lots of change and we need to be at the forefront of reacting to, and in some cases leading towards a certain change, and we'll do that. So, for example, obviously AI is top of mind at the moment for many people, and we'll be investing in AI to support our people to be more effective in front of their clients. And most companies are doing that. Yeah. But fundamentally, this is a people business, and it's about how you interact with clients on a daily basis through whatever medium they need and want that to be. So we need to provide that flexibility, but I think there'll always be a place for that human interaction. And it's how we use technology and how we adapt to the circumstances of the client, but still maintain that human level in what we do.
So I think, we talked about this a couple of episodes ago in terms of the AI fears. And I said, I like walking into a shop and getting a service and someone smiling and saying, can I help you? Whereas John apparently likes online shopping. So people are different. But I think one thing I've noticed from COVID is there was such a huge amount of technological change because we were forced to. Zoom was the really exciting thing and Teams came along. And clients wanted meetings on these platforms, but there has been a change over the last few years where clients want the technology. They like our new portal, for example. I think it's great, but actually they want face-to-face meetings more than they ever have. They actually really enjoy coming in and sitting across to us and understanding and seeing what we're feeling and doing. So you're right. There's a blend that we need to provide, and that is part of being QC and providing a great service that we're trying to do. So it's every client wants something. Probably all clients want everything, but it's trying to provide it in the right way.
Well, it's about having the flexibility as well, isn't it? Because sometimes if you've got something very specific, relatively complex that you need to discuss with a client, actually doing it on Teams is quite good because you can pull things up and you can share your screen. And whereas actually, if it's just a sort of annual get together that you do ordinarily, I get every January to go and see and we always, sit in the house for an hour and a half and go through the figures, which are always very good, as you can imagine. And then we go for lunch, and wouldn't change that for the world. They wouldn't change that for the world. They're not going to do that by teams. It just doesn't. They've been clients for as long as I've been here, so it is about sort of being adaptable. But the portal is quite a good example. Do we end up in a place where we end up communicating with our clients through the portal as opposed to emails and letters? Just got some of those.
Look, I mean, I think we will end up in a place where we do what the clients want. I think clients are going to want choice, and some clients are going to want to continue to communicate in one way, and others are going to want a different way. And we need to be flexible enough as a firm to develop the communication channels of choice for our clients and go with it. Having the ability to go onto a portal and look at your investments is now something that's very normal.
Table stakes almost now, isn't it?
Absolutely. It's a hygiene factor. I would expect, though, that for many clients, while they can do that and will do that, they'll actually want to talk to their trusted advisor, their investment manager, about any decisions that they want to make on that. And they probably should do.
Do you think that a generation of people will come through that will end up trusting ChatGPT more? Or do you think that, because we've always had a DIY investment market across the world, Schwab in the US or Hargreaves or whoever it might be in the UK. So there's always going to be a cohort of people who won't pay for advice. Do you think that the market for AI solutions, and not just in wealth management, but in insurance broking or in travel agency are the two other examples of industries that could be AI'd. Do you think that market remains similar to how it's been historically, or will AI take a slightly wider, if not take all of our jobs? I mean, is that actually a threat?
Look, I mean, I think there's lots of threats out there, and I can't look into the future either. So I'm only giving you my best guess.
You can't do this through AI. I mean, this is,
Some people might say, thank God.
Well, that's true. That is true.
but yeah, I mean, in terms of the question, look, I think there is going to be a whole generation of people that have got used to AI in the same way that there's a generation of people that have got used to, WhatsApp, and then now the various things that my kids won't use WhatsApp, for example, right? Yeah. So the technology changes, but and we have to adapt with it. But I think that fundamentally, certainly as clients get into a situation where they hopefully have more money, where their situation gets more and more complex, and where some of the decisions are quite big.
Yeah, they are. They're
that's when they're going to want human beings
consequential decisions.
That's right. And as you get older and mature, some of those decisions become harder for you, and that's when you need the reassurance of talking to somebody. And I think that will maintain for a lot longer than some of the doomsayers suggest.
Totally.
So. And then there's sort of obviously we've got an international arm, Jersey, Middle East. I mean, sort of any plans for that and continue to grow it, try and sort of, world domination?
Yeah. So look, I mean, I think, currently my thoughts are with the team that we have in Dubai. So, we're actively engaged with them on a daily basis, and obviously they're living and working through some difficult circumstances at the moment. Notwithstanding that, and hopefully that will, rectify itself over the coming weeks or months. I'm bullish about the international opportunity. The reality is that the world is becoming more and more global. People are moving around and taking opportunities. I've done it, and I've experienced that for myself.
Yep.
What you find with people that are international in their mindset, but also in terms of their physical being, that even while you're moving around, you don't really want your money to move around. No. You want your money to be in one place, and you want to be comfortable that it's growing, and that it's doing so in a jurisdiction and with a set of rules and processes around it that you can feel comfortable with.
Yeah, exactly right.
And that's where our international business comes in, and whether it's clients that are in Europe, for example, that our office in Dublin are able to service, whether it's clients elsewhere in the world that are booking their funds into Jersey, there is an opportunity there. And I think that opportunity will continue to grow as the world gets smaller. frankly.
I mean, it's very relevant or topical. I had a conversation this morning with a client that's moving to Asia because he's been offered a very good job opportunity, and he has his active money with QC, and then he's got a number of platforms that he does sort of monthly investment into passives typically, and he's sort of reached out to a number of them, and I think 2 of the 3 won't continue the relationship with him. If he goes abroad, it has to be moved. Right? Yeah, it has to be moved to somewhere else. Yeah. And I spoke to him today and talked about, he wasn't even aware that we had the international proposition, but I think for him it was just easy that he could stay with the business. I've looked after him for say 5 years. He can stay with the business that he trusts. There's so much going on. There's, much better than me, but I'm sure moving country with your family to different jurisdiction, different job is stressful. You don't want to think about the investment piece at the same time. So I think, you're right. We are seeing more of those moves, and being able to have those international operations is extremely helpful. So it's, completely echo, although those sentiments make perfect sense.
Mm. And how do you think over your career, the investment offering that a typical money institution has offered to an investment institutions offered to their clients? How has that developed, and how do you think that will continue to develop? I suppose when we started our careers 20 odd years ago, it was mainly, buying for UK stocks and some gilts and maybe a US fund, wasn't it? But obviously it's changed a lot in terms of offering, and does that sort of evolution continue? Presumably it does. Yeah,
look, it has changed a lot. I think originally it was basically a UK proposition that people were buying into abroad. I think one of the things that's definitely different, by its nature, somebody that's moved abroad is quite international in the way that they think and the way that they act. So having a purely UK-based set of solutions, not only is it not right probably from a tax perspective, depending on the jurisdiction they're in, but it's also not right from an outlook perspective. So having options that are more international in terms of where the money is being invested and the different sectors and the like is important. So I think flexibility there. We're lucky that we've got a research team that's able to talk very sensibly about some of those different jurisdictions as well. So I think that adds us a real string to our bow. And it will, regulation has changed a huge amount. And depending on the market, continues to change regularly. So staying ahead of regulation has become a lot more complex for international organizations, because you have to think about both the regulations and the laws related to the country that the client is in, but also the regulations and the laws related to where the money is being booked. And that adds a lot of complexity for firms and complexity for individuals if they get it, clients if they get it wrong.
Yeah, totally.
So it's less about the product, honestly. It's more about the advice that they're getting and the solutions that are being given for their needs.
Yeah. And do you think that, over your time sort of in HSBC and more recently, do you think clients are sort of better behaved than they used to be in terms of there's a war in Iran, there's some tariffs happening, there's a COVID, there's a pandemic, can I sell everything now and buy it back next week? Do we think clients are better behaved? As in, are we doing our jobs better? Or
I'm not sure I'd use the phrase, are they better behaved? Look, human beings, throughout history, we have these macroeconomic issues, right? These global issues. And human beings react to that in a human way. And that brings fear, it brings excitement, sometimes it brings greed. And these are really human emotions. And the role of an advisor and of an investment manager is to help clients to see the big picture and help them to not make emotion-based decisions in either direction that are short-term in nature.
Do you think? Yeah, I would say recent volatile events. I've definitely had less communication from clients, and I wonder if that's because they're becoming desensitized to world events because there's been so much going on, or on the other hand, portfolios are more globally diversified than they've ever been. we've probably got more information at our fingertips in terms of historical events that we can provide to them.
A bit more context to it.
And that does help, because when you can say, for example, this typically after a conflict starts, the market bottoms 15 days after. Today is day 15 after the war started. It's comments like, it's facts and data like that I certainly didn't used to have when I first started my career. Well, they were hard to get hold of. I think that stuff helps a lot.
Yeah, but I mean, back to the point about how clients expect to be serviced in terms of, portal, online, app, et cetera. I've got clients who check their portfolio every day.
Yep.
So they, and we all see the news. We've all got the stocks app on our phones that we can check. Oh, FTSE's down 1% today. Oh dear, it's a disaster, isn't it? Whereas you go back 10 years, certainly clients would get a valuation every 6 months, and they probably wouldn't. I always think about 2020 was quite a good example. We sent out a valuation on the 31st of December 2019. And by the 30th of June, 6 months later, portfolios were pretty much back to where they started the year, having fallen nearly 25% in March. So it just sort of went to, the 6 monthly valuation report, you would have looked at it and gone, oh, it wasn't brilliant, was it? But there we go. Whatever, move on to the next one. And you wouldn't have seen the sort of, had you had your head in the sand for the last 6 months.
Look, I probably think about it slightly differently. The reality is that the technology's there. People expect to be able to look at it every day if they want to. And in some ways that, for some clients, that's going to make them phone you up and be worried. But for the majority, actually, I think being able to see what's going on is going to reassure them that they've got that access. They've got that ability to see it.
Yeah.
To your point about, are they desensitized? Well, possibly. But also, actually, in the same way that you can go in and demonstrate that there is a pattern of behavior that's going on across the markets over years, they can also go onto the internet themselves and see that.
See the historic performance of their portfolio.
That's reassuring.
Click of a button. Yeah. I think changing the subject slightly, in terms of QC versus HSBC, we're obviously, even Quilter Group is obviously a much smaller business.
Yeah.
Is it quite exciting that you can make change presumably more quickly than you could with HSBC? I mean, I don't know how the mechanics would work, but presumably rolling out a new portal at HSBC would be a big project. And of course it was a big project for us, but I presume things can be turned around more quickly here. Is that, I don't know, is that more exciting, more interesting, that you're, almost the business has more control over what it can do?
So, when I was looking at what did I want to do next, it was a really conscious decision of mine that I wanted to go and lead a business that I could get my arms around.
Okay.
All right. And,
totally.
so yes, it is exciting to be able to see that and feel that. I say to my wife that the best thing about the job is I'll come home in the evening and I know every day that I've had an impact, positive or sometimes negative, but I know that I've had an impact.
Yeah.
Because it's small enough that I can do that. I'm able to make decisions that are having an impact on clients or on our people every single day.
And that's interesting, because actually part of the reason I joined Quilter as it was in 2013 was that I'd started my career at a large Swiss private bank, where getting something done or changed, or you had something that didn't fit into the streamline was hard work, lots of layers of people and emails and committees. And then I joined a startup wealth management business in 2008 in the summer, just before Lehman Brothers. Brilliant. Where getting something done was, well, we've got no one to do this. It's like, not many of us sat in the office. Whereas when I joined Cheviot then there was very much a nice balance. If there's something out of the ordinary, someone is there to help you, and you've got compliance and marketing and ops and management and people who are rowing in the same direction. But it wasn't too big that it was all just clogged up in time and bureaucracy.
I think that's right. It's a happy medium. Look, HSBC is a great company, and I had a wonderful career there, and I enjoyed every minute of it. But one of the downsides of a great company is sometimes getting things moving or getting decisions made. You have to really work the matrix to make that happen. This is less of a matrix organization. It's less complicated. Hopefully, I'm in a role now where I can make some of those decisions more quickly, and that's fun. but there's also a great responsibility that comes with that. So I'm very conscious of it.
Yeah, no, very good. Anything else you want to ask? Oh, I mean, we ought to touch on markets, given it's been a pretty lively since we last met.
It has indeed. No, I don't think I've got any other questions for John. You can tell us which way market's going if you want.
I could do that, but hey, I might be wrong.
Yeah, I mean, we will sort of just touch on it briefly. I mean, I've got a couple of charts here, and I'll sort of turn this around, John, so you can see.
Yeah.
The left chart on this one here is crude oil Brent, which is up at 108 today, having been down in the sort of 60s. And then the right-hand chart here is UK natural gas prices, which have obviously gone up a lot as well, but nowhere near as much as they went up in 2021, 2022. Yeah. So, I think if sort of clients are sort of, maybe some people have got a little bit of PTSD about 2022, which was a very bad year for diversified portfolios because your bonds were down and your equities were down. I think the one thing I would say is we're nowhere near that sort of level of pain yet, and clearly it could get worse.
I think on the bond point as well, what we should talk about is we started 2022 with with bond yields at a very, very low level. Yeah. So any movement,
we've got that chart here actually. Okay. So I'll pop that in.
Yeah. So any movement in gilt yields had a much bigger impact on the pricing of particularly long duration gilts and bonds. So as a starting point, clients are getting proper returns. I think duration is typically shorter than it was back then as well, because we were having to push duration for returns. So I think, the bond segment of the portfolios will be holding up much better than in 2022. And you're right, that the conversations I have had are around 2022 and that PTSD, as you phrase it, that period.
I mean, the damage in equity markets has been not insignificant. I guess most equity markets, I'll pull up a chart here of the major indices. This chart actually goes back 15 months. So this also encapsulates the tariffs in March 2025. But markets had a really strong run in January and February. So yes, it's not pleasant to see the FTSE down and the European and the S&P, et cetera, et cetera. But it's not, we're not into the realms of 10, 15, 20% as yet, are we?
No, and I think the market's being... I think a few have commented they're surprised at how well the market's held up considering what's going on. I think actually the market's being fairly rational in terms of what Trump has done historically around events where economics get tougher and there's more internal pressure. I mean, there's no doubt that there is a lot of international and internal pressure on him in terms of where energy prices are, inflation worries. We've had the ECB, we've had the Bank of England, we've had the Fed sort of flip in terms of what they're looking to do. Everyone's sat on their hands so far, but expectations, take the UK, we've gone from expecting 2 rate cuts to, I think the market's pricing in.
Pull up my Wizzy chart that I made today.
Oh, there you are.
There we go. So the market was expecting 2 rate cuts this year, and it was all looking good. Inflation was unwinding. It was all, it was looking great. And all of a sudden today, the market's now expecting 3 or 4 rate hikes over the next 12, 18 months, which is the orange line on this chart, is where the market thinks the rates are going as at today. I mean, for what my opinion is worth, and it's not worth much, I think that's a little bit OTT. I don't think we're going to get to that point. For one main reason is that the difference between now and 2022, the labour market was very tight in 2022 because we were coming out of COVID, reopening, people were taking on lots of labour, and we didn't have as many. Unemployment's a lot lower today than it was then. And I think that means that the Bank of England will want to look through, I think, a little bit more of an energy price shock in the way that it was a lot different in 2022. But we'll see. I don't know what the answer is.
I think we've got there's more of a growth concern today as well, isn't there, in terms of what central banks want to do, because we had some softer employment numbers. I think central banks have got 2 things to look at. One is growth, one is inflation. My suspicion is they have more of an eye on growth than they do on inflation still. Yeah. I think, I've had other clients, going back to the 70s and the oil price shocks then. I think, for our listeners, the important thing to say is the oil price is a percentage of GDP, and in terms of overall cost was much higher back in the 70s. It had a much
more oil-intensive economy.
Much greater impact on inflation data. compared to today. But you know, it is a concern, I think. But you know, diversified portfolios, the bond segments are still, as we said, holding up well.
They are.
You know, most equity indices are. You know, there's not been a massive collapse this year at all.
I was on a podcast on Tuesday with some advisors that I look after, and they had me on and say, "So, what's happening? Is everyone running around shouting buy and sell down the phone?" So, no, you can guarantee we're not doing that. We tend to want to fix the sunroof fix the roof whilst the sun's shining. So there's, you know, we're letting portfolios do their thing, and actually there might be some opportunities to come out of this. So that's, you know, we're trying to look at it positively as well. These things do throw up opportunities, but I think we'll probably sit down again in a couple of weeks, won't we? Hopefully it'll all settle down a little bit and we can pick through some of the bits. But John, back to you and a couple of sort of quick fire questions. Anything exciting that you've been reading or watching or listening to that you think that our viewers and listeners will be interested in?
I'm not sure if it's exciting, but the book that I've been reading most recently is The 100-Year Life, which maybe I turned 50 recently, so maybe it's about me, you know, beginning to look at my own, you know, mortality. But the whole point of the 50-year life, the 100-year life rather, is about how the world needs to change for a life of longevity, and how the systems that we were all brought up on need to fundamentally change as people live longer and the opportunities that come from that. So pretty fundamental for all of us.
Yeah, absolutely. Because a lot of clients who come in at 65 preparing a retirement, you know, 25, 30 years, well, actually, you plan for that as a sort of best/worst case scenario, if that makes sense. But if you're now planning for 40, 50 years, then that might need to radically alter what we do in terms of offering
100%.
kind of retirement products.
Yeah, 100%. So anyway, so the book's not as dry as that sounds. It's actually really, really interesting. And it covers a whole range of things. But it's food for thought for all of us in terms of both how we live our lives as we begin to get older towards the end of our careers, and how long that career needs to go in order to pay for hopefully a much longer retirement period.
Yeah.
Well, John, you're not for 50, so you better get reading that as well.
We're going to be here till we're 75, aren't we? Isn't that what's going to happen?
Something like that.
Yeah, well. Good. We'll wrap it up there if that's the case. Happy chance. Yeah, good. Thanks very much, everyone, for watching and listening today. Any questions, get involved. Email james.hughes@quiltercheviot.com, or I'm jonathan.raymond@quiltercheviot.com, and we'll see you next time. Thanks very much.
Thank you.